Now, Pakistan's crumbling economy is facing a dire future. Despite several attempts to get access to IMF, the bailout package, no positive response has emerged from the world financial body as the financial meltdown continues to worsen. Islamabad has now said that the country's trade deficit has surged to an all-time high of $48.66 billion in the outgoing fiscal year. This is a significant jump from $30.8 billion that was reported in the last fiscal year. Now, what is interesting to note here is that Pakistan's trade deficit reached such an alarming level despite a ban on more than 800 items. Pakistani government in May brought in an emergency action banning the import of hundreds of non-essential luxury items. The move was part of the government's emergency economic plan. Now, the coalition government's battle against a bloated trade gap has failed to produce the desired result of reducing the effects of the financial crisis. The trade gap has mainly widened due to nearly double increase in imports compared to exports. It also was fueled due to the highest ever increase in oil prices and commodities in the international market. Now, mainly because of the global supply chain disruption due to the ongoing war in Ukraine. The outgoing fiscal year's trade deficit has crossed the $37 billion figure of 2017 to 2019. Now, this mostly led by the imports related to the China-Pakistan economic corridor. Now, Pakistan's import bill increased 43.45% to $80.51 billion during 2021 to 2022. This was up from $56.12 billion just a year ago. The International Monetary Fund team, after visiting Islamabad, had called for fresh conditions which need to be fulfilled before the world lending body approves any bailout packages. The new conditions include increasing electricity tariffs and imposing a levy on petroleum products. The IMF has also asked Pakistan to strengthen its anti-corruption mechanism in order to revive the $6 billion bailout package.
WION, now available in your country. Download the app now. Get all the news on the move.